Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 12th, 2024. It's 10:45 a.m. Eastern Time as I'm starting the video. Wanted to follow up with another one. I'm still going to get to the commodities video soon, and that'll be the next one. I just wanted to go over a list of the recent alerts that I've had on this charting program. You can go back as far as 30 days. So these are all the price alerts that I've had trigger. And what I'm doing here is quite a few of these are still setups. Some of these are trades. Almost all of these I've shared with you. There's a couple new ones in here that I might not have shared with you that are still setups right now, and that's why I'm going to do this. So I'm going to shrink this down a little bit so we can look at the charts. I'll go through these in order. In other words, you can see, I don't know if you can see it here, the date December 10th. And so we go all the way down through November 12th down here. So let's just look at these in that order. Let me go to the first one here, which is Palo Alto Networks. PANW is the ticker. I'm going to scrunch this back over, and this one is definitely a setup. Software company, beautiful looking chart in my opinion. I may or may not have highlighted back here, I can't recall. We had a divergent high, trendline break, went down here, and this is a good level. I'm going to actually tweak this just a hair. Well, it's about where okay, I'll leave it there. It's call that 266. That's your max target, or at least right as of now. And what I see on this one, again, it did trigger an alert, but every time I get an alert, I check the stock. My alerts are set on the trend line. So all you have to do is touch the trend line. So that's not a sell signal yet. So this one is still very much a trade setup. It has a very nice, clean, defined uptrend line right there. Nice big negative divergence. It's been building from this point here. Also bigger divergence. It's been spanning. You really have to go back to a weekly chart to see that bigger divergence there in this. So this tells me when this one finally gives us a sell signal, you're looking at a decent trend reversal that probably will, based on my analysis of this chart, take this stock down about, before all said and done, meaning the minor little bounces along the way, about a good 35% drop, maybe even more. This would be a potential longer term target. So just replicate that trend line. Again, it's off that significant August 5th low right there. And you have a BOD, or benefit of the doubt level, which should seal the deal. So again, a trend line break would trigger a sell signal, but a break below 381.46. That was like so many stocks here. You had a lot of stocks testing multi-year or all-time highs, recently broke out, but on just about all of them, the momentum indicators are waning, showing divergence. The breakouts occurred on low volume. Many of the breakouts did. This one had decent volume on the breakout. But again, if it fails, then that's a false breakout, and that will send the stock down to these targets here. All right, enough on that one. Let's go to the next. Let's move it back here. We have ITB. I just covered that the other day. Still going. This is an actionable active trade. I highlighted it 2 days ago in the breakdown. Nothing but red sticks so far. And now we're comfortably below the uptrend line right there. Kind of a sister trade, if you will, or one I said to watch, is XHB. That's the other home builders ETF. And I had given you 2 days ago a benefit of the doubt trend line, which is the one that we are now starting to crack. So if we can close solidly below here, or build on that breakdown right here on XHB, then that's going to increase the odds that ITB and the builders themselves will continue to fall. So I already covered that one the other day. You can pull that video up to see long-term targets and all that other stuff. SQM, I highlighted this one recently as well as a trade setup, untriggered yet. Again, I would add an alert because it touched the trend line, but that's it. So really, really well-defined trend line. I mentioned this one as, lists here specialty chemicals, but then I recalled that's in my lithium stocks list. So I believe they are a lithium company as well. Whether that's, incorrect categorization or part of what they do and you have some pretty lofty targets. I've traded this stock over the years, and I know it once it can run, it really runs. And you've got the 200 days as well. Beautiful 200-day moving averages. It keeps getting rejected on, and so if it can clear that 43 level, you've taken out the trend line, you've taken out the 200-day moving averages, and that should open the door to these pretty aggressive targets, giving you a potential even to that first target. That's 28% gain. If we happen to get all the way up to that final target, you're talking a double on your money. That's 100% profit to from where we're at right now up to that $80 level. Alrighty, next one would be FTAI. I don't believe I've covered this one with you, but I've had an alert that triggered just recently, and that is right here. You can, or I can, add a BOD trend line if I wanted to. I can go like that, but this is the trend line that fits better. That was an intraday break, and so this one is on a sell signal. Broke down of that well-defined trend line. They do aviation leasing. I looked them up actually when I first marked up the chart. They have planes in various countries, including Russia and some of these very unfriendly countries. I don't know what, if they had planes in Syria or not, but there's a lot of political turmoil. So, there's a chance that they may lose some of those planes. Again, that's fundamental stuff. You should and can do your own due diligence. I'm just looking back here. I had a divergent low and there was a breakout. So, and you can see also here, took out the 200-day moving averages and it's still well above. So at least it probably wants to come visit those 200s. So that's an actionable trade right there. All right, next one is TMUS. Let's give it a little more real estate here on the chart. TMUS is T-Mobile. I got an alert when the alert triggered when I was on vacation recently. This was a few days ago. Big red candle down through there, and also took out that BOD support level right there. Went up to try to back test, and it's below both those support levels. So it's very actionable right now because you're below that 232.82 level, and you could run a tight stop above that recent candle, yesterday's candle, or a more liberal stop above the trend line. You can see my targets. Minimum target, bare minimum, was 205.62. That would give you, if hit, drop of about 11% almost. And I think ultimately my preferred or longer term target is this primary uptrend line right here, which also comes in with the 193 support level. So that would give you a total, if my final target is hit, profit of about 16%. Okay, next up, TXN, Texas Instruments, starting to crack, broke down the other day. It took out in one fell swoop the 200-day moving averages. Let me show you those. This is where once you recover, the stock was choppy here, so it had a few cross throughs on the 200s, but it was below the 200s there in a bear market. And once it clearly started moving away, that was the uptrend defined, and buyers will buy these tech stocks on pullbacks to the 200s, and they will sell them once the 200s go, and then you're in a downtrend, and then the MO is to short rallies back into the 200s. Now, it's only slightly below. The stock has a history, like many tech stocks do, of briefly punching through. You can either take it on face value and say, I'll short be below, and if it goes back above, I'll cover. That's one strategy there, but it also took out the uptrend line. So I wouldn't trade this one solely on the 200s, but the fact the 200s are gone and that uptrend line, and again, the semis, I think have been one of the, my favorite short sectors for a while. They're kind of grinding around. So watch this one. Texas Instruments obviously is a big one. PayPal. This was and still is a long trade idea. We already hit. We took it. Can't even remember now exactly where, but we've already hit our second target on that one. It's been a nice gainer, and still. I wanted to point out that we do have some divergence building. Remember, we're coming off a very much bigger divergent low. So if the market holds up into year end and into, in the beginning of the year, then I do believe these targets will get hit. If you're looking for, I believe I've already updated with you, a tight stop, you could put one somewhat below that trend line. More liberal stop could be below T1, both still protecting gains on the trade if you want to hold out for more upside. AON, I'm seeing quite a few insurance stocks breaking down recently. I've had alerts set on a lot of them. This one broke down here. That one, I believe now I'm getting back to when I might have been on vacation. That one broke down there, and it's nothing but red sticks. Hit my first target already. It's been consolidating around there. Also appears to possibly be bear flagging. It's a little bear flagging action last couple days. So if it breaks down, that should take us down to the some of the deeper targets you can see here on, and that's AON. All right, next would be Texas Roadhouse TXRH. Told you, been restaurants are setting up for the next leg down. Been bearish on these. My targets are the same. You can go back if at the bottom of this video, if you're new to the site, all the symbols that I cover in a video, all the ticker symbols are included and they're tagged. Those tags below the post on the website are hyperlinked, and it will bring you back to previous coverage. If you click on TXRH, all coverage that I've done on that stock in reverse chronological order, so you can then go back and see the coverage of that. But that one was shared in advance, and so far so good. It's an actionable trade. It broke down. It's up, not much, 3.5% since the breakdown. Still maintaining these targets here. All right, Eat is another restaurant stock. Brinker International, they own Chili's, Maggiano's Italian, Little Italy, It's Just Wings. Breakdown still below and right about even with the breakdown point, so still an actionable trade. Again, all these short trades will play out better, start moving down more aggressively if and when the market gets those sell signals. So remember, we've been able to pick out, we've got probably an equal number of long and short trades on the site right now, and some of the short trades have played out very well. It's a great stock pickers market. If you're in, we shorted the mortgage stocks, Rocket, and some of the other ones for big double-digit gains. So it's just about being in the right sector, and this is one that appears very toppy. And we hit them back here earlier. Was it last year or in 2022? Anyways, that one's still looking good. And here's your, you've got a primary uptrend line right here. So these are your initial targets, these two trend lines, and then ultimately 75.18. If things get ugly, I may extend targets, but that would be about a 42% drop. I think that's aggressive enough for right now. But you have the 200 days that are going to come in around there as well. So this is a nice target zone. A trend line down to 75.18. If it does it'll probably be waterfalling at the time. You get down close to 40, over 30%. Longs just start capitulating and stopping out, and then you get that last slide down. So what I could see this one doing, and I'm looking 5 steps ahead, of course, but waterfall down, undercut the trend line, hit that 75.18 support, and then bounce back to hold on the trend lines and the 200-day moving averages. But remember, if the stock starts to fall, the 200s are going to roll over. They roll slower than the faster moving averages. In other words, a 50-day moving average will respond to prices quicker, obviously. But either way, it's a nice target zone and big profits if that one's hit. All righty, next one up, Etsy. This is a long trade. I gave this one to you when I was on vacation. We broke above that R1 level, and as I said, as soon as it clears the 200s, it should run. The 200s have capped the advances since this one's been in this downtrend. Beautiful big divergent low, nice breakout, and just needs to clear the 200s with conviction, clearly get away from them, and then should start moving up to my, I've got some pretty aggressive targets. And like any trade, I'll leave these targets as long as the chart and price action of Etsy is constructive and the market. Let's just say I get some big sell signals in the market. They take out the 200 days, some of my longer term trend indicators slip. Then I would probably cancel these targets and call the trade in early at one of these shallower targets. All right, this is a new one. If any currency traders, the U.S. dollar Mexican peso pair. So trades very well to the technicals. And you had a nice clean downtrend line, big divergent low was a catalyst for this rally, and it's set up in this big bearish rising wedge. Broke down recently, but you can see I've had this line here. When I created that uptrend line, I also put this support level here back on the 9th. and it's been holding that level right there. So what this means, if it drops here, the dollar is falling against the peso. The Mexican, the dollar rallied against the peso, especially after Trump's win because all the big tough talks about tariffs. But if the markets think that that's overblown or that's not going to happen, then this will break down. That means the dollar will fall against, or the peso will rally. So you'd go long the peso, Mexican peso. All right, next one, UAN. This one is in that ag input sector I like. We recently hit my 83.60 target there. Again, I've covered these in multiple videos, and most recently probably would have been, this one's at long-term support, coming off a divergent low, most recent divergent low there, and that's it. And it's pulled back to support now. 75 is support, so that's an objective entry. It's pretty nice support too, so I'm highlighting this right now as actionable. We're just above it, and so you can take a long here. You can keep a tight stop a little bit below there, or a more liberal stop below this level here if you're going out long term. And then of course you want to see a break of that recent high, that 83.60 target. That should open the door to the next leg up to 93.80. And then my final current target about 104.86. All right, next one, SM. This is just another semiconductor ETF. Remember, I watch all three. SOXX is the one I typically will trade, and they also have the leverage variations of it, XOSS and XOXL. L being long or bullish, at the SOXS being short or bearish. But that tracks SOXX, the Philex stock semiconductor sector ETF. This is run by a different company. This is Van Eck. I just wanted to point out that I like to see all three break. And that's one reason you see SOXX going sideways, is because the other two, which are XSD and this one, SMH, are holding right here. This one's right at trendline support and price support. So a very technically significant level, and the 200 days. So this is triple support, guys. If you are bullish, you buy here and you go long with stop somewhat below. If you're bearish, you wait for a break of 238 with the intersecting uptrend line. And it's a well-defined uptrend line too. This one I'm not forcing. You've got a nice low off the October 2022 lows, clean reactions there, and here. You got it. Those beloved 200-day moving averages at tech stocks behave so well too, and bull trends. So you've got, what is that, triple or quadruple? 1, 2, 3, 4. Three. Triple support there. And as I like to say, the redder the better. Big red candle through there, take out the MAs and all that, and then this stock's going to fall. I'm going to give you one additional target. They're going to step in and buy it here at 199.60. That's a nice reactions there. But again, you get a trend change, and that could lead to additional downside. We're still coming off divergent high. And I've already covered SOXX in different videos recently. So let's go to the next one. Broadcom, one of the big tech, big semis, walking up the trend line and the 200 days. So same story. You've got the primary uptrend line off the 2022 lows and the trend lines there. That alert might have triggered when we kissed it right here recently. But you can see big divergent high right here, big wedge type pattern. And we're comfortably above it at the moment. But remember, semis can move pretty fast. So we're about 9% above that trend line and a little bit more above the 200-day moving averages. Just something to watch. And, I have that alert. Should still be in play. If we break it again, I'm going to make sure by setting another alert. And that's that. MSTR, still an active trade. This is one of the big crypto proxy stocks, big bearish engulfing candle, which was our short entry there. My first target is still the uptrend line. We came close, but not close enough to consider that hit. Once that goes, that should open the door to T2. And with any bearish engulfing candle pattern, max stop should be a little bit above the top of that candle, because if that gets taken out, then it's no longer a potential topping stick. So there's your targets. This one to play out is going to require Bitcoin, which I'm going to get to in a second, to drop, and most likely. Let me go down to CBDS, I would have shared this one with you a couple months back, and this covered the cannabis stocks. And you can see here I had a price alert triggered on November 25th at 9:30 in the morning. And that was right here. So this one didn't gap and run. There was a clear entry. If you took it, I don't think anybody did, because I'd be, I think I'd get some kudos. I didn't. I wish I did. But I had the alert, and it was a very super clean trend line too. And let's just measure it out. If you took it that morning, right after the breakout, when the breakout occurred, and you held it, you made 902% on your money. That's a pretty hefty gain right there. And had a little corrective profit taking, and it's zipping on up. So something's going on with that stock. Must be fundamental. And that's wish I could tell you I took it, and wish I could tell you I took all the ones that play out. I take most of them, a lot of them, but sometimes for whatever reason, if I take a look at the chart, and I don't know where it was on that day. I can't remember if I checked it and dismissed it. It's a low price little sucker too. I tend to stay away from these penny stocks, 15 cents. Just wanted to update it because it was in the alerts. IBIT, this is the proxy for our Bitcoin short. It's kind of going nowhere. Sell signal on the break of the wedge, hit my first support level. Remember, S1 is when I have a support level that's too shallow to be considered a target. Now, you could have took quit profits, but I think there'll be a reaction. That's why I'll list S1, sometimes S2, second support, and then come the targets. And so it bounced, as expected, off that first support level, put in a marginal new and still divergent high. It's been moving sideways since, maybe a little megaphone type pattern. Either way, no matter what, it has to take out S1 to open the door to these targets, and then the final target down here. My thoughts, Bitcoin has been, it's funny, but over time, when it first came out, the whole, the Bitcoin folks said, it's an alternative to the gamed system and manipulated currencies and then the stock market. And then it was considered like an alternative asset or something that would go up when the market went down. And there were times where it did that. But for the most part, this has just been a foaming at the mouth, frothy risk-on market. And it's a risk-on asset, and it's moving right in line with equities. So where I'm going with that is I believe that I still think that trade has a good chance of playing out, but to hit my final targets down here, it's going to take the market breaking down with the aforementioned sell signals on QQQ, SPY, NVIDIA, and things that I talked about earlier today. From where we're at now, if that final target's good, and look, I may pull it in because you have a trend line right here. I'll also look at Bitcoin spot price, futures, everything else. T5 might end up being the final target because that trend line comes in a little higher, but then that's about a 30% drop if hit. Right now, it's resilient. They keep buying the pullbacks, so I'm not super crazy about it, but it's still right about entry, a hair above entry. So I'm leaving this one on as an active trade. SIMO, S-I-M-O. This was one of the semis that I liked, shared with you recently. It's a trade idea based on the bullish falling wedge, divergent low, positive divergence, breakout, back test, moved up, hit my first target right here, and it's pulled back to R1. R1, remember, resistance once broken then becomes support. So right now this is actually S1. So I'm going to update that. Up. All right, R1, S1. S is not a cap. Now it's caps. All right, and so especially if you like the semis. And I've done this for the last few months, even though at times where I've been short and bearish the semi sector as a whole via stocks, whatever, we've been long quite a few semis, including SMCI after closing out that short. Intel caught the two rips on that. And so there are some that look better than others. So another way for me to put this, I would 100 times rather be long SIMO than be long NVIDIA right now. In fact, it's the other way around. So this one has a final target of, what is that, 65.98. So just a hair under 66. But it's going to need to take out T1. Remember, multiple targets are listed because upon the initial tag of each target, a reaction is likely. So if you're an active trader, you can game the pullbacks, and you want to buy a pullback to support ideally, recycle back in, and then or add on even if maybe you did a half position back in, add on when T1's broken, you could do that as well, and go up to T2, T3. SG, Sweet Green, another restaurant. This one broke down, back tested, punched through a little bit, but it's still below the primary uptrend line. What it did, it bounced off my first target there, 32.90, or call it S1. These are still the additional targets, and ultimately I'm calling this one still down to about 16.27, which still gives it about another 55% downside if hit. EWG, remember I was covering a lot of the international market ETFs, the foreign indices, and Germany had just hit the trend line the other day, and the 200-day moving averages. So keep an eye on this one, because if Germany breaks down, even though the U.S. leads the rest of the world, they tend to follow the U.S. markets. If you start seeing the other big, especially the G7 countries breaking down, then that's going to show you there's problems over there in Eurozone, which we know there is. That's why the ECB just cut a quarter point today, citing, concerned weakness in their economy, slowing down, worries about the tariffs and everything else. I just realized you couldn't even see the all these symbols that I'm covering. There they are. Okay, sorry, I didn't realize I had the screen cut off. Last one, KLAC. Had an alert fire. This was almost a month ago, so that would have been, what was that, November 12th? Okay, it would have been a break of this level here, about 655. And so this is one of the big chip equipment makers. And so as I often say, the semiconductor sector is pretty much the canary in the coal mine for the tech sector as a whole. And then the chip equipment makers are the canary in the coal mine for the chip sector, because when orders slow, they're the first to feel it. So NVIDIA and all these other companies, will start calling down orders, pulling back orders. So you can see the chip equipment makers like Applied Material, they all peaked back here. And it wasn't a random peak. They peaked with divergent highs, and AMAT went on to break down below the primary trend line, back tested it. That proved to be resistance, moving lower. It has positive divergence, but that is a major sell signal there. And in a downtrend, it's not uncommon to get bullish divergence that either only plays out for a small rally or doesn't play out at all. So all I can tell you is these chip equipment makers peaked way back here, and most of the chip stocks have. NVIDIA has been an outlier, and that's another reason I'm putting so much into it. It's almost single-handedly holding up the chip. Well, again, the chip sector peaked. Again, let's not forget about that. We peaked back here in July, and chips have been moving lower. This is SOX. But again, you start to see the next levels get taken out. I've been harping on this, 209.55. We'll see the next leg down there. All right, guys, I will wrap up here, and then as soon as I can, I'll get the next video out covering some of the commodities I like, and anything else I come across. This has been Randy Finney with Right Side of the Chart. Have a great day.